Hi, I'm Fook with Alpha B Group. Let's talk taxes. Today, I'm going to talk about why an employee actually pays more taxes compared to a business owner. When you look at the explanation on this side, it's for employees. They get income first, then they pay taxes on that income, and then whatever's left over, they spend. For business owners, they get income first, then they spend what they need to spend, and then they pay taxes on the remaining amount. So let's compare this to two different people. On this side, the employee will be Karen, and on this side, the business owner will be Lisa. So Karen, the employee, makes $100,000. She could put $19,500 into a 401k, and then the remaining leftover is what is taxable income to her. So for Lisa, the business owner, she actually makes $100,000 as well, but she could spend on business expenses first, and then she could fund her solo 401k, and then whatever is left over, that's what she pays taxes on. The big difference here is that one, she could spend more for business deductions that Karen can't do, and she could also put a little bit more towards her 401k or her solo 401k. So let's assume Lisa and Karen are both video editors and also make YouTube videos. That's their occupation. Now the difference is that with Lisa, she could write off expenses. So let's just say she has to travel to New York, where her uncle lives, to visit her uncle, but her uncle might happen to be also a client of hers, where he asked her to make video edits for his business. So anytime that she flies to New York, she could pretty much write off that as a business expense, as long as there is a business reason to it. This includes her hotel, her cabs, her Uber rides, and even meals that she has while traveling. But also, let's say she eats with some friends at a restaurant. Her friends are in the same industry as her, so they talk about business all the time. That's a deduction too. Another deduction is that if she paid for parking at a garage before she went into the restaurant, so that's a deduction too, valet as well. And because she is her own business, she works from home, and she could deduct her home office, so she could deduct a portion of her rent, her utilities, her internet. And with her home office, she also got a standing desk, an ergonomic chair, a drawer, a fancy TV that she hangs up on there because she needs to use it to help edit her videos. She also bought a webcam and general office supplies. And then because she works from home, anytime she drives to anywhere to meet with clients or to go to meetings, she could write off the mileage for that. She has cell phone bills that she could write off. And then with her cell phone bills, she could actually write off the cost of her cell phone. So if she wanted to buy an iPhone, she could write that off. If she bought a MacBook to do her editing on, she could write that off. Any software included in that MacBook that she had to buy to do editing, she could write that off. And she could possibly write off subscriptions to certain things, like maybe Netflix, because she needs to be inspired on how to make YouTube videos and edit. So Netflix helps her inspire when it comes to cinematography. And then she could also write off her Audible account because she's listening to business books on how to improve herself and how to improve her business. And with all of her office supplies, she also needs an iPad because she needs it. That's part of her work. So she bought an iPad. She bought a Magic Mouse. She bought a pen. She bought anything that you can buy with Apple. She could buy headphones because all this can be business related for her industry. And because she makes videos, she's also bought a drone. And let's just say she has a kid. She could actually pay her kid $12,000 for helping her in the business. If the kid has school supplies, we could also try to deduct her kid's school supplies, because as long as it could be related to the business and used for the business, then it's deductible. Things like pens and paper, printing paper, a printer, a Chromebook that the kid needs to use for school, but also is using it for work mainly. So maybe he needs a phone because he needs to be connected to you all the time in case something comes up with the business when it comes to video editing or YouTube. He would also need a desk, a chair, and a drawer too. So all these expenses could be used to help reduce your taxes, because now you're only paying taxes on the difference between your income minus all these expenses that you have. So when we calculate the difference between the taxes between the two, it's actually a $7,000 difference that Lisa paid less than compared to Karen. They both make the same amount of money, but Lisa actually paid $7,000 less in taxes because she got to utilize these expenses. And that's how a business owner can pay less taxes. If you know anyone that might be interested in this video, please share it. And I'm off to my next video.